What is going on, everybody, and welcome to another Beta Memoirs. And today, the market in general, it's the first time we've had full volume in probably about 2 weeks. And we're seeing the institutions essentially start selling off. Yes, there's been a lot of news on COVID. We had our job numbers today as well, which, yes, kind of sold off, essentially pointing to the fact that a lot of people have left jobs in November. Being said, we are still we're still rock solid. I mean, earnings will really show us how the market is doing, and we've been seeing this over the past year. We've getting a lot of data essentially saying that things are bad, that things are horrible, and then come earnings, and still uh, companies are crushing it. And so, being said, we have seen some slack in Amazon, but you have to remember that there was a big strain on supply during the pandemic. So, Amazon had some astronomical numbers going into some of the earnings early next or last year in the first in the Q4 earnings reports, and a couple others after that. But then towards the back half of the year, they started seeing some tapering off of that, and the markets. The thing is a lot of these projections, in looking at these companies' earnings, they always want the companies to do better. Amazon was in a very unique situation considering the pandemic. It was already set up for online shopping and everything, so it benefited from that. Now, to put up those kind of numbers every single quarter is just not going to happen, right? This is a once, essentially in a lifetime, hopefully, that you see something like this. So those kind of numbers are going to be reached. And so a lot of forward guidance, a lot of information needs to be relayed that these numbers are going to be put up. And so moving forward, you're going to see hits in Amazon. You're going to see hits in other companies. Tesla, however, even through everything that it's been through, Tesla has been one of the very unique companies that have still been hitting it out of the park, have still been putting up ridiculous amounts of numbers. A lot of people want to downplay that, but they've overcome a lot, even to get to where they are, just being an EV company after General Motors and GM and Ford and all their competition were essentially trying to downplay what Elon and Tesla were doing, years ago. Now that they've established themselves, right, everybody's trying to play catch up. But being said, again, Tesla is very unique in this situation and does very well in the earnings. And this earnings is going to be no different. They've been destroying it on deliveries. So, being said, again, we're seeing full volume in the market. I wanted to go over some information as well too. Our FOMC meeting, which is going to be extremely important moving forward because we're watching for rate raises, will be on the 25th and 26th. So the end of the month, we'll start seeing FOMC and where their guidance is as far as a time frame. That is what's going to be important on these rate raises. A lot of people are starting to say that they're starting to price in a rate raise. It could be possible, but I think ultimately what it is tomorrow we do have the FOMC minutes from the last meeting, so they're going to give insight onto why they felt the need that they're going to need to do multiple rate raises this year. Again, I think it's only going to be a brief digestion of that, and then we're going to start pushing back up. One thing I do not like is that SPX, I've mentioned this before, every time XPX essentially has been making all-time highs, we start selling. We made all-time highs here, we sold off, we made all-time highs here, we continued to sell off, we made all-time highs here, and we sold off again, and we're making all-time highs here again. I'm wondering if we're starting to come back down and sell. So we're going to see these choppy pushes like this. We'll get a couple day pushes, get some choppiness, pull back, push. I think there's going to be a lot of push and pull possibly this year, especially if a lot of growth stocks are essentially guiding the market. A lot of growth stocks have come into into the SPY. And so, being said, with what's going on in innovation and everything, I have to understand that once the rate raises and stuff start getting adjusting, yes, it's going to be up and down, but we're going to see a lot more of this kind of market in the next couple months until we determine what's going on with the rate raises again. And then at that point, I think we'll get a correction and then a proper correction. And then at that point, I think the following rate raises won't be as dramatic as this first one will. Again, there'll be normalization once this first rate raise comes in. So you'll see stuff start to pull back. A lot of big tech will start pulling back a little bit going forward. But earnings, we do have bank earnings. That's going to be on the week of the 18th through the 21st. You're also going to get Netflix on the 20th, ASML. So you got some chips coming up as well, which is going to be really big. We want to see how big chips do. ASML is on the 19th, so we really want to keep an eye on that. So we got some big earnings coming up in about another week. We do have Tilray next week on Monday. And then after that, on to the 24th through the 27th, we have Intel, Verizon, 3M, a lot of credit card companies still going on that week. And then the following week, there's GM, Nokia, UPS. I know a lot of the bigger techs haven't quite come out with earnings dates yet. I'm sure that will start backfilling. I'm looking at kind of the last week of January, even the first week of February is probably when we're going to see about that. Normally, big tech is about a week or two after bank earnings. And like I said, we're going to see Netflix that's normally the one that guides all of big tech. So again, those will start filling in here very quickly. So we got a big month in store. And then again, we got the FOMC meeting right at the end of the month, which is going to be important on time frame. Now, if we go into Bitcoin, I've been talking about this day in and day out. Bitcoin is still holding. Again, it could still drop down to that 62, 60 or 42, 41 K mark and still be okay. Again, I think with crypto in itself, crypto was initially being used off of inflation, but now I'm more leaning towards it's being pushed through NFTs, and that's, I think, how crypto will grow a lot more. So I don't know if you're going to see that difference in shifting powers potentially with Ethereum, possibly Cardano and DOT taking over. Bitcoin kind of just going flat. I don't know if Bitcoin's going to really be doing a lot of pumping, considering utility on the crypto side will be heavily on NFTs. And I think that's what's going to be guiding the next big run in crypto, especially coming into this year with mass adoption and the technology behind it is really what is driving it, not so much the currency in itself. And so I think moving forward, that is going to be what is going to be guiding crypto in 2022, I believe. So being said, again, it's still looking good so far, but still looking for a catalyst to push it higher again to get it up to 100K as people were predicting. I think you're going to need, I think NFTs will be the thing that drives it. More people coming into the space. You got Coinbase, you got Kraken, you got a bunch of different exchanges that are trying to create their own NFT ecosystem, and doing that is going to bring a lot more people into the space. And doing that, I think will start really pushing up the crypto space in general. So being said, going into tomorrow, if we look at Tesla, Elon did mention that he does have some news coming out towards the back half of this week on the Gigafactory. So that might be something that's going to drive the market. I think after tomorrow, I think we're going to get another pullback tomorrow because of the meeting minutes. And I think after that will be our dip going into earnings. But you have to do be mindful. Stuff changes a lot. Even some of the stuff I've been talking about, I've always been bullish. I have to understand in a bullish market, it's still going to pull back. These things are still going to happen. unforeseen events happen throughout the day and stuff pulls back. And if you're had any kind of longevity in the market, you realize this, that the market just does not go up. I know over the past roughly almost 2 years, a lot of people, that's all you've seen. You've seen that big sell-off in March back in 2019. And then from that point, we've just kind of gone straight up. And the market doesn't just do that. The market does have a lot of ups and downs. You do want to back test stuff. You don't want to just go straight up because those parabolic moves have parabolic crashes. So you definitely want back testing to allow that strength to build up and allow stocks to rest, because stocks do need to rest. So being said, Tesla, I'm really watching that 1100 mark, I think, is my first support. And then if we can get back down to this 1061 mark would be fantastic. I really load up here if that is a possibility going into earnings. I really like Tesla there, especially going into Friday. I'm hoping we get that dip tomorrow, and then I could possibly get in for the long haul, but I want to see how that plays out. Again, the cycle for Tesla has typically been around this time frame into February. Tesla does well, and then it's pretty stagnant for the rest of the year until going into again, the back half of the year, fall period is normally when Tesla is pretty strong. Apple, I think, is getting to that point where it loses momentum and it kind of just chops around a lot. So I'm not really looking at Apple. Google's been strong, but again today, the market is definitely chilling out, especially with volume. You have to see what the big institutions are doing. The big institutions, if they don't like where the market is at after 2 weeks of low volume, they'll come in and they'll correct it to where they want it. And that's kind of what we're seeing. Yes, they may believe that this is going to be a strong year, but they're going to correct it down to where they can load up before that happens. So being said, Amazon and e-commerce took a major beating today. All the strength was in banks. All the strength was in value. This is why I started talking about trying to find some value plays going into this year is going to be important. I think my biggest ones are probably Roblox and Airbnb. I think are very strong going into this quarter. Yes, there's a lot of worry about new variants and stuff as far as the travel space, but I think Airbnb is still a solid name. And moving forward, I don't think you're really going to be hurting with Airbnb. And I always love Roblox. It puts up some phenomenal numbers just in general, and especially with the metaverse play. On top of everything that it does, I think is a great growth stock moving forward as well. But tomorrow, I really want to see, again, Tesla, I think, is going to be your major gauge. I want to see if e-commerce picks back up. I think e-commerce will pick back up at some point. Amazon, I think, will pick back up. I really want it back over all this resistance. I really like it back over that 34, 32 mark. Once it gets back over that, then I'll be interested in Amazon. Right now, it's just done a lot of this chop. So unless you're playing these ranges, which they play phenomenal ranges, you just got to be very mindful. So if it hits that 33.16 mark, is essentially a good zone there. Up to the 34.20 mark is a phenomenal play as far as Amazon goes. Roblox has been strong. It's been holding this 93 mark really well. I really want it down here around that 90 mark, that 89 mark. That's where the 200 moving average is. If it gets there, again, it's normally a reversal spot. It's kind of what I'm looking at. I really don't want this dipping back down below that and going back to IPO prices. But we'll have to see how that plays out. With normalization, I don't know if Roblox will start correcting, but I think, again, there's a lot of strong positivity in there. Airbnb has been very strong, always is very strong. It did chop a lot mid-season last year, but it is doing well now. And a lot of times you'll see a rotation where big names and stuff will kind of have the same rotation around this time period and around the fall time period, or where they're strongest. And then you'll have random individual stocks that kind of run throughout the year. Airbnb, solid. We want it to hold this 165 mark. It's been playing this nice range, 165 to about 172. So kind of watching that for tomorrow as well. Moderna really took a hit today. I don't know if I want to watch that. ASML, I want to see if this gets down to the essentially the 749 mark. We are back testing. I want to see if this does drop a little bit more down here. If it does reach that 748 mark, I want to get into this and possibly ride this into earnings. I think we'll be really good. UPST, actually, I got out of this right at the pop at open before the sell-off. This has kind of really been a disappointment. I think what's going to start making this UPST start popping again is earnings, ultimately. Again, with everything that's been going on, with all the policy changes and everything, what's going to happen is you're going to see a lot of the names, even your Palantir's really been struggling lately. A lot of the really good companies, people will go with the ones that are more established, your Teslas, Apples, your Googles, as opposed to the potential of newer companies that have a lot of potential coming up. So these will have their day, but you have to understand that right now is not really the time. Right now, people are going to put their money where they know the names extremely well. You can turn around every corner and essentially see a Tesla, or you can Google something or have an Apple, right? So that is ultimately where it's at. The banks, again, extremely strong. They are starting to show some weakness now after hours. If they want to see if this does push up, this is the only thing that's been holding up the SPX. If these start to fail, I see that second leg down tomorrow, which again I think is where I'm going to dip by tomorrow, because banks, again, the only thing holding today. I want to see this could possibly go parabolic again tomorrow, but we are getting pretty close to the top on these banks, and they do play a range really well. So we might see one more leg up on the banks, which could be a possibility tomorrow. And then, which would make sense. And then we get the FOMC meeting notes, digestion. We might see a pullback in tech for dip buy on Thursday morning, possibly even tomorrow night. We have to see how that plays out. But that's kind of my thesis going into tomorrow. Bank or chips in themselves, they've been really crazy. They've been bouncing all over. I think earnings this year again will be great, but they're kind of already high from this point. They do get a lot of because of the supply shock and demand and trying to catch up with everything. I think they'll do great on earnings. But we don't want to get these things that would be way overpriced, right? They haven't come back and retested a lot of support, and that's an issue. Something I've always been talked about just about the market in general. You want to go and retest old resistance and to make sure they're solid supports. Otherwise, your strength is only going to last for so long, and then you're going to make have those mini flash crashes where you come back down because you haven't been testing what was old resistance. So going forward, I do also like RBLY, our Revolve group. I do really like what they're doing here. One thing here is that it's been consolidating extremely nicely here. And I think this is only a matter of time before this starts to break out as well. Rotation right now has really been in a lot of the big value stocks and banks, and then back into tech. And right now we're seeing that value, and we're seeing banks right now. BA had a monster day as well. Right now we're seeing that rotation. So what I'm thinking is this rotation is going to last tomorrow, possibly even into Thursday morning, and then we're going to get that big rotation back into FANG and see it start running. At some point, we'll start to get to where everything starts running again. I think that possibly won't even happen until after our first rate raise, and then people will feel safer. They'll come out of big tech because of the fact that the rate raises and normalization. Then you'll see we'll see a big surge in mid caps at that point moving forward. But another big thing is Bitcoin. I know Coin had a big move today. These things are to keep on watch. They are really close. They are bottoming and consolidating around here, just like Bitcoin. I think it's only a matter of time before this breaks out. So you definitely want to keep these on watch. I might actually start taking a position on Coin here. I really do like Coin moving forward as a company. I know being in crypto, I don't like their fees, and I know it seems like you get robbed every time you try to make a transaction with Coinbase. But I do like that they are getting into the NFT space and what they're trying to provide for everybody. So I think potentially for 2022, Coin could be a huge mover going in this year and could really take a huge part of the market share this year with what they're doing. Potentially, I mean, you still got Tesla, which I think is going to still a show for this year and probably the next couple of years to come. Then you have a couple other ones, but I think ultimately crypto is going to bring just a crazy change that we have not seen since the internet. With crypto and blockchain, and Coin is going to be, I think, one of the front runners of those. So that's why I want to keep an eye on it for 2022. But if you have made it this far, hit that like button and subscribe if you haven't done so already. And until next time, I'll see you guys later.